My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now.
Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. Other people want to make friends, just trying to make you some money. My job, it's not just to entertain, but to educate and teach you. So call me at 1-800-743-CNBC or tweet me at Jim Cramer. Sometimes this market divides itself into categories that are just mind-blowing. Today was all about old versus new. And COVID variants that kill versus variants that are meaningless. And that is what drove the action. Dow sinking 151 points, S&P advancing 0.23%, and that's a new record. The Nasdaq gained 0.98%. Holy cow. I got to break it down for you because let's start with the old because it's the only way to explain this stuff. And I think a lot of you are confused that the Dow could be down and the rest of the market could be up. For weeks on end, the leader, oil. The oil complex has roared. The stocks haven't given up as much as they don't go up as much as the price of crude, oddly, right? But that's in part because the producers aren't drilling as much as they used to. Instead, they want to husband their cash. After a long history of reckless spending, they pledge to be more prudent, and they are. At the same time, the oil companies are all trying to be better corporate citizens, which means less drilling and more investments in cleaning up the environment. You can only be so green if you're in the fossil fuel business. But when a group of climate insurgents won a proxy fight against ExxonMobil recently, the industry got religion on climate change. Paradoxically, that's been good for their stocks because less drilling translates into higher oil prices. But with crude down $1 today, the buyers have cashiered their generals. So everything in the oil patch just got obliterated. While Exxon's no longer in the Dow, Chevron stock, which I like very much, was down 3%, and that heavily weighed on the index. So Chevron's first negative. Second, well, there's the Boeing saga. Now, it looks like the Federal Aviation Administration is taking a very hard line with Boeing's new planes, to say the least. And now, I was all excited about the possibility for the big United Continental order to be announced. Then I discovered that the new 777 model has issues. 777? I mean, I thought that one was okay. Now, the company's adamant that there's no need to worry about the pushback timeline because it's really not pushed back. But I got to tell you, I think this is more about the tenor or the terror. The FAA must really despise these guys. After all the recent safety issues, can you blame them? Unfortunately, the industrials need Boeing. It's too important to the group. Now that the aerospace kingpin has 2 strikes against it, let's see, another project in trouble and no China orders in sight, you have to ask, will strike 3 be a gigantic equity offering? Now, we trusted CFO Greg Smith when he said there wouldn't be a big secondary. Didn't need it, but he retires this week. Let me put it this way. If you like Boeing, please keep your powder dry. I think you're going to get a better chance to buy it at lower levels. And my charitable trust owns it, so I'm really not talking my book. We also have the new COVID variants to consider. Do you really want to travel before you find out whether your vaccine works against the new strains? If one of these mutations can break through the vaccines, well, that is bad news. Hence why the airlines and cruise lines were all down hideously today. Plus, the $500 million equity offering from Carnival sure didn't help. After all these deals, who knows whether these companies will have any earnings power left over for actual shareholders. Now, Marriott dropped $4 on this. That's a ton of points to shed on a COVID variant. But it's also giving you buying opportunities. I mean, I have to ask, how can you not like American Express down more than 4 points here? I mean, there's a lot more to Amex than just travel overseas. How about the infrastructure bill? Well, that was fabulous for a host of industries, but only if it can pass the Senate. On Friday, it looked like President Biden might have killed the bipartisan package by tying it to a second infrastructure bill that the Democrats could try to pass on a party line vote. He walked those comments back somewhat, and I still think things will work out. But the steel machinery stocks, they can't withstand this kind of hiccup, so their stocks gave up the ghost. Now, just contrast every company I just named with these new names in the NASDAQ. Okay? I mean, why don't we start here with Intelia? That's it just accomplished something incredible, coming up with a successful gene editing treatment to combat transthyretin amyloidosis. That's a rare genetic disease, but it does impact more than 50,000 people. They had a small study. Wow. it seemed to really do great things. Only phase one, but stock shot up 50% on the news. Pin action here is incredible. Regeneron's their partner on this, although that one actually pulled back today. But CRISPR, that's the one without the E, CRISPR, Editas Medicine, both have similar experiments, and their stocks soared today. Now, all these are huge holdings of Cathie Wood's ARC Genomic Revolution ETF. Just like with Tesla, she believed in gene editing early and often. A couple months ago, Wood's favorite stocks have been laid to waste. But when we got that white-hot consumer price index number in mid-May, and Wall Street decided that the Fed would have to destroy the economy in order to save it from inflation, these hyper-growth plays have caught fire again. Now the Wood stocks have tremendous momentum. Remember how this kind of market works, please. If it's exciting, it goes higher, even if it's already got a seemingly insane valuation. Right now, the valuation is irrelevant. I know that's not supposed to happen, but it is. These companies have something special. And right now, Wall Street likes special. Hey, speaking of special, how about NVIDIA? How about the stock of NVIDIA jumping 5% on the possibility that they'll be allowed to acquire ARM Holdings? The big money's been betting against this deal, which would make NVIDIA a major player in CPUs for cell phones and personal computers. Remember, they dominate GPUs. They think it'll be blocked as anti-competitive. The semiconductor industry hasn't been supportive either. They don't want NVIDIA to become any more powerful than it is already. But this weekend, we learned that Marvell Tech, Broadcom, and MediaTek, that's a gigantic Taiwanese chipmaker, are all on board with the merger. The idea that it's anti-competitive seems ridiculous to me personally, as ARM and NVIDIA have very little overlap in their product lines. I was worried that the London-based ARM could lose engineers to California, so the British might try to block it. However, NVIDIA CEO Jensen Huang plans to go on a hiring binge in the UK when Jensen promises something he delivers. That only leaves China as a potential obstacle. Now, during the height of the trade war, most people thought China would block NVIDIA's last acquisition of Mellanox. That's an Israeli company. Nope. While the Chinese regulators dragged they dragged their feet. They ultimately let it go through. I'm betting the same thing happens this time, and Wall Street's starting to agree, which is why the stock pole vaulted $38. That is the highest I've seen NVIDIA jump, and if you want to go to my Twitter feed, you can see how also NVIDIA can jump, but that's the dog. Then there's PayPal, which is about to give everyday users the go-ahead to sell things on their personal Venmo accounts for a fee. So PayPal goes up nicely while Visa and MasterCard get hit, even as I think that connection is, at best, tenuous. Next up, when Tesla gets hit with a big recall in China, 285,000 cars is big. You have to figure the stock get crushed, right? But this is a in Tesla we trust market, and Tesla grows. So instead, the stock rallies up 2.5%. Hey, how about AMC? New Fast and Furious movie, 2 million viewers this weekend. Meme stocks with good news and a big slate of films coming up. Well, what happens? Jump 7.5%. I still think it could be a buy. Hey, how about Facebook with a big win over overreaching Federal Trade Commission, setting that stock up 4% and propelling it into the $1 trillion club. Finally, there is Brooklyn-based Etsy, which jumped 7% today after we found out that it's buying Elo 7. That's its Brazilian counterpart for $217 million. Now, that may not sound like a big deal, but Elo 7 has 1.9 million active buyers, 56,000 active sellers, 8 million items for sale. That could be huge in this fractured market. More on Etsy later. Listen, I know it seems simplistic. How can the new companies have such a halo while the old-fashioned ones have a pig pen like aura? Can it change? A bunch of big banks announced capital return plans this very evening. It seems sweet, but maybe that's just too boring for these buyers. We're back in an environment where the bulls like excitement, and if it's soporific, it can barely budge either way. Bottom line, right now the people in control of this market want companies that are, for lack of a better word, cool. Even if you think coolness per share is a stupid metric, right now the market disagrees.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.
Shepard Smith here. Thanks for watching CNBC on YouTube.